I mean, if you take a look at the movies here this morning, once again, what are you telling your clients? What's really going to stop this rout?
I think it's very hard to forecast how the global situation proceeds, as is, I think, fairly obvious. The course of the virus is going to be the most important factor that we need to be looking at globally. What we can say about Asia is that Asia looks a bit less vulnerable to either financial panic or the virus than some other global regions at the moment. You have some good news as far as trends in infection rates in China and in North Asia, and you haven't had a very high level of new infections in places like, say, Singapore or Taiwan. You also have cheaper valuations in Asia. I think that the Asian financial system is a bit more solid than financial systems in other global regions. And Asia is a net beneficiary of oil prices coming down. There's no way that Asia can perform well if the global situation continues to deteriorate, but it might do a little bit less badly.
When do I take advantage of all those things, Dan? Do I wait a few days? Should I take advantage of that right now and just looking at the price drops right now, or should I wait this out?
I think it depends on what your objective is. If you are trying to hit the bottom and buy aggressive recovery plays, probably not yet the moment. But if you want to buy into some stocks that likely will be at a higher level 12 months from now, stocks or sectors that have strong longer-term fundamentals and that won't get totally scorched in a worst-case scenario in the short run, there are some opportunities out there.
And then I get your argument that perhaps Asia ex-Japan may fare better, but how does Asia actually deal with a stronger dollar now? Because everyone was still calling for a weaker dollar this year, and we're just not seeing it.
Yeah, Asia has become a bit less sensitive to the dollar than it has been historically. If you go back even just, say, 10 years ago, Asian equities were very vulnerable to dollar strength. Now, the more important currency to be looking at for Asia is the renminbi. Of course, there are linkages between dollar strength and renminbi weakness, but Asia is not Latin America. You don't have big dollar debt here to worry about. The dollar debt is pretty limited, and in most cases, there are natural hedges. I think that Asia can survive dollar strength, though it clearly is a negative. It's not the negative that it used to be.
Dan, as things stand, though, and a lot of what's happening reminds us of what happened back in 2008 when, yes, there was price action down, yes, there was a sell-off, yes, there was risk aversion. But are we getting to a point where it's a liquidity crunch? Because when that happens, all bets are off. Your thoughts, sir?
We're not there yet, but there are certainly risks that we could get there when the world's most important asset class is under pressure and where liquidity is drying up in that class. Clearly, there are reasons to be worried about generalized risk-off trades and liquidity drying up in other asset classes. So this is clearly a risk that we need to take seriously, but we're not there yet.